Hello guys, how are you? I did well in my company law paper, and in 2 days I have got property law paper. I'm preparing for it nowadays. So anyway, nothing has changed as per the last video that I did yesterday. We are looking to continue following the plan, but in today's video, I'm going to discuss few of the alternative scenarios which could have happened but would not happen, but they still could happen. They have the very less probability of happening, but we must look into those. So one of the scenario is that this was a first wave 1, and this whole is a flat for wave 2, and now we are going to start wave 3. That is, we are already in the wave 3. So this will not fall after it breaks this bottom. It will continue going up and will go above to break the all-time highs, break these highs, and then fall. That is, after it will break the all-time highs, only then it will fall. So this is the alternative scenario that I wanted you guys to have a look at it. That is 1, 2 for this flat, and this pattern is very dangerous, and this pattern is bread and butter for the Elliott wave traders, and I'll tell you why. And this is the 3 going on. There will be 4, and then there will be 5. So this is the pattern that we must be aware of. And you know why this pattern is important? Because whenever it has occurred in past on daily time frame, it has given rise to big rallies. For example, over here, this thing. This was the wave 1. This was the wave 2. And look what we got next. A side to behold wave 3. So similarly, what if this is the pattern? This is the same flat. And it looks like the same flat. I am telling you this. It's the same thing. And now we will start the wave 3. And if this is the wave 3, then what will become of the bear? What will become of the bear traders? What will become of the bottom shorters? What will become of the people who are looking for this crash? They will be caught with their pants down. So I just wanted to, have a look at it. This is really scary for those guys who are looking to short blindly. But there are reasons why I think this is not going to play out. Number one reason is this NQ. Nasdaq is not following this. Nasdaq is not confirming this pattern. Why? Because the last time it made this pattern, Nasdaq also made the same pattern. Right? But right now, Nasdaq is making sort of a ending structure, like it is some sort of ending structure, a wedge, which will ultimately break down. Maybe this, or just wave 2, right? So this is sort of some sort of an ending structure, which should break down. But I have seen structure like this. I've seen ending structure like this break up and continue going up. I've seen them. But why I think it won't happen this time? Because Nasdaq is not confirming, first of all, the structure, and also my algorithm which looks for the reversals. the part of the algorithm which looks for the reversal is looking for the reversal right now. It is looking for some sort of a squeeze and then correction. So correction or dump, whatever, but it should break down. It should not continue going up like this. So this is a major difference why I think that perhaps we won't continue going up like in 2020. This is the only reason. Otherwise, this structure that I'm showing you, this flat, this is the bread and butter for the Elliott wave traders. You show them this thing and they will always long blindly. So I just wanted to discuss this pattern with you guys. And I think this still will cause a big move up because this pattern always plays out. So even if it is not 1, 2, 3, 4, 5, it will be A, B, and then C. And then you guys will get your crash if this is C. Or if this is end of wave 1, and then there will be a wave 2, and then we will start the move up. In any case, after this move down, if it comes, or if it goes here, there will be a move up like this. And there is also a third reason which I want to show you why I think it is possible that we will break down. It is because of the Fibonacci ratios. For this extension, we have not reached this level as yet. So as per the Fibonacci rules, we must touch it minimum. This is the minimum requirement. So it's possible that we go down and touch this. It's very much possible. But when it will touch this, it will create divergence on weekly and daily, and it will cause a bounce. In this video, I'm discussing the alternative scenarios, right? I'm discussing very long-term forecasting and alternative scenarios, which I have not discussed before. But I'm not deviating from my original path. The original plan is, you all guys already know that we are looking for a squeeze and then move down. Whether we move down till here or till here, it should not affect us. Why? Because we are not interested in forecasting. We are interested in trading and planning. So if we can get this move and this move or this move, we will trade as it will come. So it's of no use to you and me and anybody else to discuss whether we are going to crash like this or we are just going to do a wave 2 like this for this wave 1 and then start. It shouldn't affect us, right? If you are bullish, then it definitely looks like the end of wave 2 or end of wave 1, and it should give rise to wave 2 for one more 3. But if you are bearish, then this should be the completion of the structure ABC, like this: A, B, and then C. C is in 5 waves, so it is fulfilling the requirement A, B, C, and then down to touch the Fibonacci required level, and then up. I just wanted to show you guys the pattern on ES and SPX because this pattern is personally my favorite. I like trading flats, so this flat is really juicy. But there are certain differences that it has from what is the algorithm showing over here than what the algorithm was showing over here. So because of that, I am thinking that after this squeeze, we can go down. And also this could be because of the seasonality also. Because May has to be maybe a bit weaker because of sell in May and go away phenomena. So maybe it will sell off in May and then we will buy in June for the move up. And it will become a bigger flat, like a bigger, pattern like this, a bigger flat like this. Like this. For example, I will show you in the past. Like this one. Like this one. It makes a bigger running flat for one more up. This one. In NQ, it is much better. Let's go to NQ. Yeah. Like this one. This pattern. So maybe something like this plays out. Today, I'm not discussing the algorithm. I'm just showing you the alternative pathways or projection which can come because of the seasonality. This is a path 1. This is a path 2. So I think during the June, we will have our bottom. So maybe whether the stock market is over here on June or whether over here on June, we should be good. But if stock market is over here when the June is here, then something is really messed up, right? But we should be aware of everything. So I just wanted to show you guys this thing because I'm really concerned about this pattern. If this turns out to be the wave 3, then all the bottom shorters, they are done. Because if this is wave 3, we will clearly go over it. And we will not just break this top and go down. We will do a big squeeze. So that all of the accounts, all of the bottom shorters, their accounts are blown away. They are dead. They get killed. So it will not be just like a break the top and then go down. It will be a severe squeeze. So let's hope this is not the wave 3. One fundamental reason for it not being the wave 3 could be the fact that Federal Reserve again will increase the rate on Wednesday or Thursday, whenever the meeting is. So you guys could say that how can it be wave 3 when Federal Reserve is going to increase the rates again? So it must be the wave C, and then we should go down. But I want to point out something. Since this level, since this area, Federal Reserve has only increased the rates continuously. But stock market has only gone up. Since June last year, Federal Reserve has continuously increased the rates, but stock market has refused to budge, has refused to listen to Federal Reserve, has refused to go down. So what makes you think that on Wednesday or Thursday, there will be a hike in rate and it won't be the wave 3? It could very well be the wave 3. Just look at the price action. Increase in rates on every FOMC meeting, but we are only going up. So if God forbids this is a wave 3, then be careful. Because this is a really killer pattern. And I just showed you that raising of interest rate has done nothing to the stock market. It has only gone up. Apple, let's discuss Apple. Now, what if this is a pattern? For this, we will do this, and then we'll go up. If this happens, then we are good. We are excellent. But what if this is a pattern? And now we are going to go up. What will you guys do then? I don't think this will happen. But I just want to show you guys the alternative. I think this is the pattern that is in play. And for this, we should get at this before up. Maybe till this level before up. So when the apple will fall, everything will correct. Everything will go down. And if you look closely to this is similar to this with the correction in the middle. So this is so this is one piece. This is one piece. And this is, sorry. So this is one piece. And this is the second piece. So we should get a second piece also like this. I'm just doing conjecture and hyperbole analysis. So don't take it seriously. I'm just telling you. So after we have this piece done, we should get something like this for the piece on the left hand side, an equal thing. And after this, we should get the move up. So if this happens, everything is good. Everything will happen as per our projection. But if it doesn't happen like this, then it could be a serious problem for us. So these are the alternative scenarios I just wanted to show you. This line is already above Apple. So it should be able to stop it after this squeeze. It should be able to, it should be able to make Apple do this at least. So maybe this inverse head and shoulder pattern forms like this, and then we go up. Or this thing, and then we go up. So you guys must be aware of everything, because this looks like this. This is one piece. So we should get something like this, and then up. This is a projection of stock market based on the cycle of Apple. I'll be keeping an eye on the DXY all this while, because DXY will do this. And when the dollar will go up for this move, stock market will go down. So if you're watching my present video, make sure you watch my last video, because that video actually shows the original plan. This video has got the alternative plans being discussed at the moment. So don't consider them as a primary plans or alternatives. Consider them as a very, alternative scenarios which may happen. This is the NQ daily chart. We will get a squeeze in the coming days, and after that it should break down. And if it doesn't break down, then it would mean that this is a wave 3. But it should not be the wave 3, because my algorithm is the reversal elements of the algorithm. They are projecting a squeeze and later on a dump. So it should not be the case, and we should have a move down after the move up after this squeeze. But in case, just in case, if it goes up and then it refuses to go down, then prepare for wave 3. So it will happen something like this, and then we will have a wave 3 up. This all will become a correction, a running flat. You guys understand? This will become a running flat like this. I'll show you like this one. Like this one. We go up, go up. This will become a running flat like this. So it is paramount that after this squeeze, we get our move down. This green line will come above here. The price should go below this green line, it should turn red, and then we will start our journey to the downside. I hope you guys like the today's presentation. Kindly let me know what you think in the comment, and also give me a like in the videos. Thank you very much, and I'll see you next time.